The real challenge for American business, including the insurance industry, is to work with the public to understand the value that's provided, that we do, in fact, contribute positively to people's everyday lives. Specifically in the insurance industry, that means we need to keep advocating a careful balance between regulation, and the insurance industry needs regulation. We need strong, solid solvency regulation that will make sure that insurance companies are there to pay the claims that they've promised to pay. And in fact, the record has been very, very good, even throughout the financial crisis, that that's in fact what insurance companies are doing. That combined, of course, with a very conservative management style that treats consumers' money as though it were the assets of the corporation, because in fact, that's exactly what they are. But the challenge then for us is not only to get the kind of regulation that we need, but to avoid the kind of regulation that in fact will affect consumers in a negative way. Duplicative, even contradictory regulation can lead to higher than necessary prices for consumers and can in fact inhibit the ability of insurance companies to offer consumers and businesses the kinds of insurance products that they need. Unnecessary regulation has two negative results for the public. The first is, of course, that people pay more than they need to, because in order to comply with regulations, it means people are paying more in their insurance premiums. They're also, of course, paying more to pay for more government people to engage in that regulation. So the first major impact of unnecessary regulation is that it impacts consumers in terms of higher than necessary costs. The second impact prevents the insurance industry from providing the competition and the products that our individuals and businesses need. Especially now, when American businesses need to be competitive, more regulation can result in less availability of insurance coverage. The United States International Trade Commission estimated that U.S. property and casualty insurers lose about $40 billion a year in potential revenues due to foreign barriers to trade. And in the kind of economy that we're faced with worldwide, where the United States economy is down a bit but other economies are up, we think America can best be supported if our businesses are able to export their products and services more freely and bring some of that money back home to create more jobs in America. For that reason, in addition to supporting good, solid, uniform regulation in the U.S. and globally for the insurance industry, we also would like some trade barriers torn down that a number of countries have erected in the name of regulation.